back to our YouTube channel. I will be teaching you how to trade divergence pattern. Divergence is when an asset price moves in the opposite direction of the technical indicator. Mostly signals weak trends or beginning of a reversal. There are a few types of divergence, but today I will be talking about bullish divergence, bearish divergence, and hidden divergence. Follow me as we learn the secret behind divergent trading system. Bear in mind, this system works on all assets, all tradable assets, crypto, stock market, volatility index, currency market. It works in all tradable assets. Pattern appears. After watching this video, you will be able to know what divergence is, and when you see them in the market, you will know how to take advantage of those patterns because they really work well. For me, I've been trading only divergence. Everything I trade in the market, be it break and retest, any strategy I have now, the first signal that will lead me to any other confirmation or any other thing that I have in my head must be divergent. That is just for me, and this video is just like to show you what I do. If you can incorporate it into your own system as well, I believe it will really change a lot for you, because divergence is a pattern that you don't really have to search a lot to see them. They appear every day, be it London section, Asian section, New York. You will see divergence in lower time frame, 1 hour, 4 hour, 5 minutes, 13 minutes, 15 minutes, be it 2-minute time frame, 1-minute time frame. You can trade divergence in all those time frames. The difference lies within your timing and your execution plans or preparation. This video will be like an eye-opener for you. If you can take advantage of the information you will get from this video, I believe that it will change a lot of things within your trading journey. Let's dive in. I will be using only the RSI. You can add other indicators that you want to add. So I want to keep it simple. Simplicity is the key. We'll be adding only the RSI, just the default mode. You don't need to change anything on trading view. Just use the default mode. If you come up with any figure that really works well for you, fine. For me, I use the default mode, so I don't change anything. I only remove all other things that comes with the default RSI indicator. Main question will be, how do we trade divergence? Normally, divergence occurs after a significant amount of movement in the market. After the market have already moved in one direction for a long period of time. Sometimes it appears within a trend. As the market is moving, the divergence will just occur within there as a continuation pattern. So it's either a reversal pattern or a continuation pattern. If you are trading on the lower time frame, it doesn't really change anything. It can appear anywhere, like from 30 minutes, 5 minutes, 15 minutes. You can have a couple of divergences that are still within the trend of 4-hour movement or 1-hour movement. So it depends on which time frame you are focusing on. Pick one time frame. If it's 1 hour or 30 minutes, pick one time frame. Okay, any time frame that you did your analysis, make sure you focus on that time frame. If you like trading in 5 minutes, focus on 5 minutes time frame. Okay, do analysis on 1 hour, like knowing where the market is in 1 hour time frame, if we are on a support level or we are heading to a resistance level. After doing your markups within that 1 hour time frame, go down to your 5 minute or 15 minute and stay there. Look for divergent pattern. When it appears, you trade it the way you're supposed to trade it. So here, if you look at the indicator, you will see that the market trended from this area. The market went down all the way to this region, presented a divergence pattern here. Here you have a low here and you have a lower low here, right? But if you are to look at your the RSI, you will see that here you have a low and you have a higher low. Okay, instead of the chart and indicator showing you the same thing, they are really opposite of each other. The chart is showing what is opposite of what the technical indicator is showing us in this area. This is how divergence appears in the market. It's a bullish divergence, and market went straight up. Then around this region as well, you can also notice that after this upward movement, the market presented another divergence within this period, within this zone. Here you have a high and you have a higher high. On the RSI, you have a high and you have a lower high. What you're seeing here is a bearish divergence. If you look at this, you can see that the market formed a low and a lower low. Here, on the RSI, the market formed a low and a higher low. What happened next after that? The market went up. Now, the question is, how do we trade this pattern, and where should we place our stop loss? What should be our first target, second target, if there is fourth target? Here, using this as an example, if we are to trade here, your first target should be, as this is forming, your stop loss should be below this lower low. See, in this direction, you entered here. Your first target here always be your first target, the starting point of that divergence region. This is your first target. Then your second target should be this level here, this level right here. Then your third target should be this level right here, this level right here. These are levels that you should be targeting. The market may not give you all the three take profit, 1, 2, 3, but these are how you place your target. These are areas you need to be targeting whenever you see this pattern happen. In most cases, you may be lucky enough on that day, the market will give you all the three take profit. Sometimes you just have one first take profit smashed, second take profit smashed, third one may not be, it may be halfway to the third take profit. It also depends on how far your target is. Sometimes if your target is too far, the market may not get there before you have some pullbacks that may even get all the way to your entry point. Then the market will reverse back to its original movement. So always make sure you have your target, first target on this area, starting point of the divergence. Then your second target, the next level by your left. Always look left. Okay, your targets are always on the left side of the chart. Okay, then after second target, when you have third target, you may even have 5, 6, 7, depending on the kind of trader you are. So you need to kind of have a plan. Now let's talk about hidden divergence. What is really hidden divergence? Hidden divergence are like a continuation pattern. They happen within a trend. You can see that first the market created a standard divergence. After creating a standard divergence, it moved up. After that upward movement, it kind of paused for a while, dropped, created again another standard divergence, then moved up. It kept that bullish movement intact. The chart is showing you a low and a higher low, while the indicator is showing you a low and lower low. In this region, the market is showing you, a low, right? A higher low here. If you look at this chart very well, you can see that in the chart, you have a low here. Then here, you have a higher low. When you plot an arrow from this side to this side and connect the two of them, from the lower low to the higher low. And now, when you come back to the indicator, here you have a low and you have a lower low. Now, in this region again, the market presented the same thing. Another hidden divergence happened here. You can see that here. Have a low, have a higher low. Here you have a low and you have a lower low. Same pattern repeated itself. This pattern appears in all time frames. The most important thing there is for you to know when it's happening. It's a continuation pattern. It doesn't really change much. You can see that the movement didn't change from uptrend to downtrend, but it continued going up. As a trader, you need to be disciplined, and to stay disciplined, you need to have a set of rules. You can add yours, but I believe these few ones will help you in developing your own rules or plans on how to approach divergent trading. Because without a set out plan, I don't think you will reap the benefits trading divergent. Target the nearest level by your left. You can see it on this diagram as well. Target the nearest level by your left. Second level, third level, fourth level, fifth, and so on. Second rule is keep your stop loss below the low on a bullish divergence and above the high on a bearish divergence. Don't even argue this. If you really don't want to be stopped out always by some spike that normally happens within divergence, always keep your stop loss below the low on a bullish divergence and above the high on a bearish divergence. This will save you from a lot of stopped out and stresses that comes with you being stopped out, and later the trade will work exactly the way you anticipated. Okay, this will help you. As you can see on this diagram I just showed you, this is one on bearish divergence, this is the one on bullish divergence. If you didn't do it well, this is what will happen to you. Yeah, and the market has no emotion. It can do this to you 1 million times and still keep doing until you learn your lesson. Third rules, trading divergence. If you want to trade this divergence pattern successfully, you need to obey this rule. Make sure that the market has trended for some time before you pick this pattern. Okay, try to make sure at least the market has some movement. Okay, don't just pick a pattern from something that looks this way. You can see this right now on the screen. So because you saw this and later the market formed divergence, you just pick it. Oh, it's a divergence, I'm moving in. Okay, make sure the market trended for a little time, then you can pick a divergence pattern. So the fourth one is never underestimate the importance of risk management. If there is any area you feel like you want to ask me some question, I'll be reading the comment. Thank you for watching.